Hello guys, welcome back to my YouTube channel. My name is Saint Manuel. So today we're going to be talking about crypto trading and the difference between crypto trading and forex trading because this looks easy to differentiate, but a lot of people get to be confused when they come to deciding if they should go for the crypto market or the forex market. So in this video, I'm going to be breaking it down. I'm going to be explaining everything involved, like the difference between the crypto market and the forex market and the advantage in the crypto market and also the forex market. So let's just dive straight to the video to avoid making the video too long. So firstly, let's start from capital. When you're coming to the forex market, you're coming to the trading market. Let's say the trading generally. If you're coming to the trading market and you are a newbie, let's say you do not have the much capital to go into the market. I'm not going to say that capital might play a bigger role in both market. But one thing I'm going to tell you is that when you're coming in to the crypto, the trading space, and maybe let me say you have like a $50 capital or a $100 capital, you're trying to come to the trading space, and also you want to try to manage your risks to avoid losing much or blowing your account so fast. I would say, okay, that the crypto market is more easy to manage your risks. Though both markets are very volatile, I'm not going to lie, you both markets are very volatile. But when it comes to managing your risks, the crypto market is more beneficial. It's more beneficent for you to manage your risks more to compare to the forex market, because the forex markets are determined by the lot size, but the crypto market you can choose or you can decide to trade with leverage or without leverage. That is why it is more easy for you to trade lesser with a lesser fund to compare to the forex market. And also the crypto market, you can trade as low as $1. It's going to something like, let me say, an exchange like um Maxi or Bybit will permit you to trade as low as $1. You can use $1 to carry a trade. Let me say trade like Memecoin and Solana and the rest, but I don't think it works on BTC and Ethereum. But I feel like I don't think it works. You can be able to take a trade on BTC with $1, but some other pairs you can trade with as low as $1, even lower than $1. It is still permitted, it still allow you trade. But that same thing does not play in the forex market. The forex market, you need to have at least a good amount of money, especially for people that trade things like commodity. You need to have a good amount of money for you to be able to carry out a position. When you're coming to the forex market, something like, let me say, you want to trade things like USDT, USD, JPY, or GBP, USD, and the rest. Yes, it will permit you to trade low. It can permit you to even trade up to $1, but it's not going to give you that advantage to compare to the forex, to the crypto market. And another thing I need to understand is that the crypto market is more volatile than the forex market. So if you are trying to use a lesser lot size to power the forex market, so you can be able to manage your risk, there's a high chance that you might likely make little profits. Something like, let me say, a pair like Hero USD that hardly move, like it hardly move. It's mostly, most time it's just in the higher time frame, is mostly ranging. It barely move, it barely break out. Pair like that, you need a higher lot size for you to be able to carry those kind of pair, for you to be able to see profits. But if you're trading something like the crypto space, you don't need all that for you to see 2x, 3x, 4x, because the market is mostly volatile. It's either a day it can pump 10%, it can dump 10%. So it is very volatile for you to be able to trade that to compare to the forex market. But apart from that all, I'm going to still explain what I'm still going to try to throw some light in the difference between the crypto market and the forex market. Because when they talk about the crypto market, people feel like if you talk about crypto, it's just all about maybe trading the futures market. But crypto itself is more than just the future market. It's comprised of different types of trading. When you talk about the crypto market, we have the degen, we have DeFi, we have for futures that some people also call derivative, and we also have the spot trading. So the crypto market actually give you more opportunity to trade in different category. Though people that trade degen is more risky to compare to others. So the degen and the and the derivative is more like you can actually be a day trader on that. It's more like a day trading. It's not something that you have to invest and live for a long time. But the DeFi and spot trading is more like where you invest and you leave it for a very long time. So the difference here now between the DeFi and spot trading here is that the DeFi, you are trading direct on the blockchain. Why spot is trading on a centralized exchange. When you trade DeFi, you're trading on a decentralized exchange. And when you trade spots, you are trading on a centralized exchange. An example of centralized exchange are things like Binance, Bybit, Maxi, OKX, and the rest. And examples of decentralized exchange are things like Trust Wallet, Exodus, MetaMask, Phantom, and the rest, Thronekeeper, and the rest. So these are just simple things that you just need to understand when you're coming to the space and trying to navigate on which pair that you feel like is best for you to trade on. So talking about the market hours, like maybe a kind of person that you prefer trading just during the working days and you don't want to take the full 7 days on trading and you just want to try to just at least manage your trading space so you can also have time for yourself. I will advise you go for the forex market because the forex market will give you opportunity for you to also have time for yourself. The forex market just work for only 5 days. It starts from a Monday. Most time if you're from Nigeria, you're going to notice that the market mostly open around 10 on Sunday, 10 p.m. or 11 p.m. The market open and it close 10 p.m. It close 9 p.m., 10 p.m. on Friday. You do normally, this is just their working hours. This is most of the time they work. The markets open around 10, close around 10 on Friday. So the forex markets actually have what they call the opening market and the crypto and the closing markets. The market opens around, let's say the market opens around 9, around 10, 11 every day. 10:11 p.m. Nigerian time every day and closes around 9:10 Nigerian time p.m. every day. It opens and closes, though just few minutes, but it opens and closes around between 9 to 11 every day because most time the time frame get to change. Sometimes the market might be opening around, might be closing around 9, opening around 10. For gold take at least an hour before it opens, while other pairs within few minutes they have opened back. While sometimes they can close around maybe 10 o'clock and open maybe around 11:10. So most time the markets, the timing are not stable, so that's why I'm putting it from 9 to 11. But within these 3 hours the market close and open within these 3 hours, and if there should be any sweep that might be taken out for it to be able to cross you over within this field, within these 3 hours, it is expected to do that. But when it comes to the crypto space, this does not happen like that. The crypto is different because when you're talking about the crypto space, the crypto does not close. It is open 24/7. It starts Sunday to Sunday, it never closes. The crypto market is not like the forex market. The forex market is mostly controlled by the news, the daily news, and other fundamental analysis that implement to the technical analysis. But when you talk about the crypto market, it's not calculated like that. It's more of a market that is controlled by the market cap. Though I'm not going to explain much on that because this video was not meant to explain about the crypto space. Though I'm still going to make another video to explain everything about the crypto space. So, but this video is just trying to differentiate between the crypto and the forex market. So the crypto market is something that it's controlled by the market cap and how much that comes into the market. The more money that comes into the market, the more the market moves. If money is coming in, the market is pumping. If money is leaving, the market is dumping. That is for the crypto market. But for the forex market, it's not calculated like that because the forex market is mostly controlled by news. It's mostly controlled by news. You cannot just all of a sudden wake up and see the markets making a drastic pump or a drastic dump. If the market should do that, you have to check it and you figure out that there was a news that was carried out before the market do that. But when it comes to the crypto space, it's not predict. It's not you can't predict the crypto market. You can't predict if it will make a drastic pump or if it will make a drastic dump. It's most time not predictable. Yes, you can say okay that you can read the chart and maybe use technical analysis to understand or to monitor your trade, which works major of the time. But if you're more of a kind of a person that is an investor, one thing you're going to notice that if a big money comes into the market gets to pump drastically. And you cannot determine when that money is going to come into the markets. Let's say you're a crypto trader, somebody else a crypto trader, he's not going to tell you that I want to deposit a huge money to the market. He's just going to make the deposits. And when he pull the money in, he gets to pull the market with a drastic pump. And anytime he decides to remove the money, the market is still going to jump drastically. So that is why they say the crypto market is not the movement sometimes cannot be predicted. It's not predicted. It moves when money, when funds is being deposited or withdrawn from the crypto space. So another point I'm going to be dropping here is another point I'm going to be dropping here is when it comes to the strategy of trading. Most time, I would say that the crypto market is more popular, is more known, is more popular, is more talked about. The crypto space is more talked about. The hype is too much. People feel like the emotion that is attached to it, especially the sports traders, the emotion that is attached to it, and the degen traders, because the markets can pump and all of a sudden it is dumping. So when it comes to strategies of the market, the crypto market gets to play more of an unpredicted pump and dump, as I explained before. Is played an unpredicted pump and dump. That is why anybody who is into the crypto space need to first of all try to learn what they call DCA, especially if you are going into the sports trading. You need to learn DCA because it's going to be very, very vital for you when you are trading the sports markets. And also, as I explained before, the forex market is the forex market is more of technical and news drive. It's reward discipline, following economic reports and the rest, the structure, and it's quite more better to trade. I won't lie, it's quite more better if you are good with high risk trade and high reward, then no problem. You can go for the forex market. But if you're kind of person that you don't like high risks and it's still going to give you high reward, you can still go for the crypto market. The two are perfect, the two are good, the two are nice. So furthermore, another thing again I want to point out here is the mode of trading when it comes to the forex and the crypto markets. The mode of trading. The forex markets give you opportunity to take more than one trade at a time on a pair. You can take 10, 20 trade on 100 trades save on one pair as long as you are not going in with the full margin. As long as you're still going in, maybe you're going in with like 0.01 lot size. You can keep going in up to even 100 trade depending on how much is in your account. But the crypto market does not give you that opportunity if you're trading something like the derivative, which is also known as the future market. If you're trading the future, the derivative market, it does not give you that opportunity. The crypto market will only allow you to trade one at a time. Let's say you're trading on the or maybe Binance or Bybit or Maxi or OKX or Kraken or KuCoin and the rest. If you're trading on that, it's going to only permit you to take one trade at a time on a pair. Let's say you're trading BTC. You can only trade BTC once. Maybe let me say the market is pumping. You can only take a trade to pump. You cannot take it to pump and also take it to dump. It's not possible. One will close. If you take pump and you take dump, one will close. You can only take one at a time. And two, it is more easy to manage your risks. When it comes to the forex market, it's more easy to manage your risks because you can easily calculate your risks that you are to take on the market. Let's say you want to risk something like $10 on that trade. You can easily calculate and risk exactly $10. But it is different from the forex market because you might want to, let me say you want to take a trade and your risks, you want to risk $10. But when you check the market, if you say, okay, I use 0.01 lot size, it might be giving you risks of $6. If at the point that you want to set your Excel, it might be giving you risks of $6. You cannot just leave your Excel there and still risk $6. It's either you move your Excel downward. So now you have to risk more. You have to reduce your profits for you to be able to risk $10, or you increase your risks, which you now use 0.02. Now you're not risking $10 again. It's either you reduce your profits, like the profit you have to make, that is you increase your SL, or you increase your risks. when it comes to the forex market. So that is why the forex market is more high. That's why the forex market is calculated as a high risk market to compare to the crypto market. The crypto market is easy to navigate around, though the pattern in which the trading are being taken are quite different, because the forex market mostly deal with the margin and the leverage. Let me just say the crypto market deal with, excuse me, the crypto market deal with leverage, while the forex market deal with the lot size. So it's different, and but it's different, but it's the same, because it's still the same chart that we analyze to be able to take the trade. And also, when it comes to the crypto market, it's easy to break even. Let me say you're taking a trade and the trade is running like 3x. You can set a break even on the crypto market, but you cannot set a break even on the forex market. That's another difference there. When you're trading the crypto market, let me say you want to sleep and you feel like, okay, if the market gets to this zone, there's a high chance that the market might likely want to dump. And if it should dump, it's going to dump on me. And I don't want to lose this profits. You might want to take a trade and you feel like, okay, if I should take this trade now, there's a high chance that the trade might dump on me. And if it should dump on me, I might likely lose this profit, and I don't want to lose this profit. So because you don't want to lose that profit, you might decide that, okay, what I'm going to do is I'm going to set a break even and allow my trade to play out. But when it comes to the forex market, it's not the same. You can only set an alarm there when you get to that zone. You use your hand and half your lot size. You have your lot size. Maybe you're going with one lot. You can decide to have it to 0.5, so you can be able to break even. So that's another different there. But the both market is lovely and nice. If you want to go into the crypto space, it's lovely and nice. And also, I will always advise, before you go into the market, try to learn your risk management. Try to learn more. Don't just dive in because people feel like um it has everything, like it's profitable, it can change your life due to the stories you hear from the internet. It's not like that. The trading market itself is very terrible. I've been there for a while now, and I can tell you that it is not the way they tell you. So I will advise you, try to learn more and try to equip yourself with more knowledge before you come into the market, whether you're going for the crypto, you're going for the forex. And if maybe you enjoy what I said, or if you feel like you want to still get to interact with me and learn more, I really appreciate it if you subscribe, drop a like, drop a comment. It will also help both me and you. I'm still a growing YouTube channel, so I may not say that I am yet perfect or I'm good with my video making. I'm still learning, but trust me, I have enough knowledge to give out, and I promise to give you the best. I'm going to be dropping video every week, sometimes one, two, three a week, but we're going to try to give you the best. I'm not trying to hype, but I'm going to try to give you the best. So thanks for your time. I really appreciate. Have a nice day. Thank you.